So one of the common questions that I've received is, Nhyira, how can I study the accounting standards? Because for most students writing the financial reporting examination or the corporate reporting examination, their concern is always the accounting standards, especially for those writing the corporate reporting examination, because most of them came in with their MBA and MSc and were exempted from the financial reporting in the level 2. It means that they lacked the foundation that is established in the financial reporting, which is necessary and critical to study the corporate reporting in level 3. But over the last decade, as I've been teaching the accounting standards in financial reporting and corporate reporting across the professional qualification examinations, ICAG, ACCA, and then ICAAW, I believe that there are a couple of things that you have to take into consideration and know about when it comes to the accounting standards. So in this video, I am sharing with you a couple of tips to study the accounting standards, understand them pretty well, so that when you go to the exam hall, you will be able to pass the examination. Now, somebody may ask, why is the accounting standard so important? The accounting standard is so important because if you are writing, say, financial reporting, you are going to be having a minimum of 40% of the questions. That's just the starting point directly relating to the accounting standards, because you're going to have a dedicated 20-mark question on the accounting standards. Then you're going to be having a question on the preparation of the single entity financial statement, and that could be the statement of profit or loss and statement of changes in equity and the statement of financial position or the cash flow statement. The beauty of these is that when you are preparing any of these statements, the examiner is going to be providing you with footnotes. Each of these footnotes, when it comes to the preparation of the single entity financial statement, is going to require the application of an accounting standard. So aside the dedicated question, we're going to be having the single entity financial statement question. Then you come to the consolidated financial statement. That is question 1 waiting for you in the exam hall. In the consolidated financial statement also, there are a couple of accounting standards that will play a key role there. So in order for you to even deal with the consolidated financial statement, you have to apply some accounting standard principles, because it depends on how excited the examiner is. We have IFRS 3 business combination there. We have IAS 28 investment in associates there. We have IAS 38 intangible assets, so that we can deal with various issues about goodwill. Then there is going to be fair value adjustment. Now, when we are doing the fair value adjustment, a lot of accounting standards are going to be coming to town there. We can have IAS 16 property, plant and equipment, IAS 37 provisions, contingent liabilities, contingent assets. We can have IAS 23 borrowing cost. It depends on how excited the examiner is. So that is going to be applicable even in the consolidated financial statement. Then it depends again on how excited the examiner is. There is going to be a 5-mark question in the written part of the examination on accounting standards. So if you look at it carefully, you realize that the financial reporting exam, for you to be able to pass the exam, you need to understand the accounting standards. Same apply to corporate reporting. You're going to be having a 25-mark question waiting for you in the exam or on the accounting standards, and you must know about all the level 2 financial reporting accounting standards, plus some exclusive which are in corporate reporting that you must know about to be able to pass the examination. Then consolidated financial statement, you're going to be applying some other accounting standards there. Even when it comes to business valuation and then financial reconstruction and corporate reorganization, these topics will require you to apply the principles in the accounting standards. So it tells you that really, if you want to pass the corporate reporting examination or the financial reporting examination, then the accounting standard will be very important. And that is something that students have asked me about over and over again, Nhyira. How exactly can I study the accounting standards to position me to really pass my financial reporting exam or the corporate reporting examination? So I'm going to be sharing with you a couple of tips that you need to put in place so that it helps you to really navigate through this journey so you can prepare well for your examination and pass the exam. I believe that you don't have to risk it for corporate reporting. You don't have to risk it for financial reporting. If you understand the accounting standards very well and know how to study them pretty well, you will be in a better position to be able to ultimately pass the examination. You ready? Let's get excited into the discussion. The first thing I want you to understand is this, that the accounting standards are intertwined. You see, one of the things that really puts off a lot of people is when they see the list of accounting standards that they have to study when it comes to the corporate reporting examination or the financial reporting exam. So right there, some people are just put off and say, oh, how can I learn all of these accounting standards? No. What you must understand is that the accounting standards are intertwined. The accounting standards are interrelated. For the most part, when you are solving a given question in financial reporting and corporate reporting, you are likely to be applying about 2, 3, 4 accounting standards in just a single question to be able to get the marks allocated to that particular question. So the first thing you must understand is this, that the accounting standards are interrelated. That is the first thing. They are interrelated. Let me give you an example. If you take IAS 16, property, plant and equipment, it has a relationship with numerous other accounting standards. Number one, when you take IAS 16, property, plant and equipment, we are going to be looking at initial measurements. When it talks about initial measurement of property, plant and equipment, these are tangible non-current assets that are used in the day-to-day running of the organization, and we call them owner-occupied non-current assets. So for these non-current assets, the initial measurement, in addition to IAS 16, we can have IAS 37 come into town, and that is provisions, contingent liabilities, contingent assets, because if there's an environmental cost or restoration cost that has to be incurred as a result of restoring the place where the asset is being used, then certainly we have to include that in the initial cost of the asset in accordance with IAS 37. Number two, we can have IAS 23 come into town, borrowing cost, because when an entity borrows money to acquire or build a qualifying asset, the standard requires that the borrowing cost must be included in the initial cost of the asset. Then we will come to the issue in respect of IAS 20, government grants. There are sometimes that an entity will buy assets and will receive a grant from the government, or the government may announce a policy and say that, hey, if you go and make this amount of investment or establish a factory in this location and employ, say, this number of people, I'm going to give you X amount of money. So when it comes to IAS 20 government grants, it has some relationship with the way we do the initial recognition of that asset, because we could subtract the total grants received from the initial cost of the asset, or not include it at all and recognize it as a deferred income. So IAS 20, it's there. Then we can also talk about IAS 21, effects of changes in exchange rate, because when we are dealing with acquisition of assets or transactions denominated in currencies other than the functional currency of the entity, IAS 21 requires that we translate the foreign transaction into the functional currency of the reporting entity. And so if we are buying an asset, then IAS 21 is going to be coming to town so that we will get how we will account for it. So that is just an example, and we can even bring about IAS 19, employee benefit, because when we are constructing our own asset or building our own head office, we are paying laborers. The wages and salary we pay to those laborers who are building, who are working on our head office, who are working on that asset that we are constructing or we are building, we will not recognize that in the P&L account. Instead, IAS 19 employee benefit requires that it will be included in the initial cost of the asset. So you realize that just IAS 16, looking at the initial measurement, you are seeing about 5 accounting standards of the records: IAS 37, IAS 23, IAS 20, IAS 21, IAS 19. That is the connection. Then when you come to the subsequent measurements of property, plant and equipment, also there are a number of accounting standards that we can call on. The first one will be IAS 36, impairment of assets. The second one is going to be IAS 12, income tax, because when we do revaluation of assets, we would have to deal with the tax implication of that on the subsequent measurement of the asset. So IAS 12 is going to be coming to town. Then we will have to also deal with IFRS 5, non-current asset held for sale and discontinued operation, because when an entity decides that they are no longer going to use an asset that they are using in the day-to-day running of the organization, and that they want to sell that asset and it meets the recognition criteria, then quickly we have to move from IAS 16 to IFRS 5, non-current asset held for sale and discontinued operation. So on the subsequent measurement, we are seeing impairments, IAS 36, we are seeing income tax, IAS 12, and then we are seeing IFRS 5, non-current asset held for sale and discontinued operation. Even at the subsequent measurement, we can see IAS 40 also coming into town, and that is investment property, because an entity can again decide that an asset that they are using in the day-to-day running of the organization, now they want to rent it out or lease it out under an operating lease. So then we are now going to account for the asset in accordance with IAS 40, investment property, using the fair value model, rather than recognizing it in accordance with IAS 16, property, plant and equipment. So you realize that just talking about IAS 16, we are getting 9 or 10 other accounting standards coming in, making it 11. So that is the first principle I want you to understand, that the accounting standards are not independent. So don't look at it like, oh, a tall list of standards that I need to check. Look at them as they are intertwined, they are related to each other, and they have connection with each other. Because when you look at it with that mindset, it changes your perspective and you see it as a group. So if IAS 16 is having the first group, which is 11 accounting standards, it becomes much easier than seeing it as independent accounting standards that are not having any relationship with each other. Another example I could give you also is 3 other accounting standards that work together always, and that is IFRS 15, revenue from contract with customers, IFRS 16, leases, and IFRS 9, financial instruments. These 3 accounting standards also sometimes work together, especially when we are dealing with IFRS 16 leases and we are dealing with sale and leaseback. So these 3 standards, the principles are going to be coming into being when we are dealing with leases, sale and leaseback transaction. So that is the first thing I want you to understand. Don't see the accounting standards as a tall list of check items that you need to tick off, but see them as items or things that are interrelated so that you can learn them in that order. That is the first thing I want you to understand, that the accounting standards are intertwined with each other, and that is how you need to study them. The second thing that I want you to understand, the second tip on how to study the accounting standards is this, that when you pick each accounting standards, there are a number of things you have to know about the accounting standards. The first thing has to do with the objective of the accounting standard. So whatever accounting standard you pick, we need to ask ourselves, what is the objective of this accounting standard? So when you pick IFRS 15, revenue from contract with customers, what is its objective? When you pick IAS 16, property, plant and equipment, what is its objective? When you pick IAS 40, investment property, what is its objective? So whatever accounting standard you pick, the first thing you need to ask yourself is, what is the objective of this standard? Like, what are we trying to achieve here? Because that is the starting point. You need to establish what the standard is trying to achieve so that you get the studies going. Then the second thing is going to be some key definitions, because there are a couple of standards that will have some things that you need to take their definition seriously. When you take IAS 16, what is property, plant and equipment? What is the carrying amount? What is the fair value of an asset? What is the economic useful life of an asset? What do we mean by depreciation? What is impairment? We have to understand these terminologies. When you pick IFRS 15, revenue from contract with customers, what is revenue? What is performance obligation? We need to understand these terminologies as we go. So there are some standards that have some key terminologies that you need to know about. That is the second thing. So the objective, key terminologies. Then the third one, this doesn't happen or apply to all the accounting standards, but for most of the accounting standards, we need to know about the initial measurement and initial recognition. Now, there is a difference between measurement and recognition. Measurement is the determination of the monetary value at which an item will be carried in the financial statement. Recognition, on the other hand, is the incorporation of a transaction into the financial statement. So we need to ask ourselves, what is the initial measurement? What is the initial recognition? Now, so if we take IAS 16, property, plant and equipment, the initial measurement is simple, that the initial cost of an asset shall be the purchaser's cost plus all other directly attributable costs incurred in bringing the assets to its present use. That is the initial measurement. So what is the initial recognition? When we determine the value, then the recognition will be we debit property, plant and equipment, and then we will credit whatever has to be credited depending on what was included in the initial cost of the asset. So that is what we must understand: initial measurement and initial recognition. Then after that, we come to subsequent measurement. Subsequent measurement is how that item, that transaction will be recognized in the financial statement after it was first incorporated into the financial statement. So it depends on what we are dealing with. If it is property, plant and equipment, then on subsequent measurement, they must be carried at its carrying amount, and which will be the cost or the fair value less accumulated depreciation and or impairment losses. But the assets can be carried at the cost model or the revaluation model. If we are dealing with provisions, and that is IAS 37, and we are using the discounting factor to determine the initial value, then on subsequent measurement, the rule is that we need to do unwinding or calculate the finance cost in respect of the provisions, and that must be recognized in the profit or loss account and included in the provisions on the face of the statement of financial position under current liability or non-current liability, depending on when the payment is due. So we need to know about subsequent measurement. So objective, key definitions, initial measurement and initial recognition, then subsequent measurement. Then the last thing that you must know about each accounting standard you pick will be disclosure requirements. For some reason in the ICAG, the examiner has not really been excited about disclosure requirements of standards. But when you pick any standard at all, there are guidelines on what has to be disclosed in the notes to the financial statement in respect of certain items, certain elements. So when you pick property, plant and equipment, again, what are the things we are supposed to disclose? Number one, we are supposed to disclose how the initial measurement was calculated. We are supposed to disclose what method we are carrying the asset at on subsequent measurement. Is it at the cost model? Is it at the revaluation model? What was the rationale behind that? It must be disclosed. Then what method of depreciation are we using? Is it the straight line method, the reducing balance method? During the year, did we revalue the asset? Is it an upward revaluation or downward revaluation? How did we account for that? It must be disclosed. During the year, did the asset suffer any impairment? If we tested for impairment, how did we test for the impairment? And if the asset was impaired, at what amount? How did we account for the impairment? All of these things must be disclosed in the notes to the financial statement. So when you pick the accounting standards, you must know about the objective, you must know about the key terminologies, you must know about initial measurement and initial recognition, you must know about subsequent measurement, and then the disclosure requirements. That is the second thing you must understand about how to study the accounting standards. The third step that I want you to take when it comes to studying the accounting standards will be to spend time to understand the principles that underlie the accounting standards. Listen, none of the accounting standard can be considered to be difficult. It's just that people are not really paying attention to the principles in respect of the standards. Like what I said a moment ago in respect of the initial measurement of an asset. The rule is that the initial measurement of an asset shall be the purchaser's cost plus all other directly attributable costs incurred in bringing the asset to its present use. Now that is the general principle, but what is the breakdown of that principle? That initial cost will include issues like if we bought the asset, then the purchase price of the asset. If we were given any trade discount, we have to less that trade discount. If we paid any expert, we have to add that into it. If the asset requires installation, the installation cost will be included. If we require some future payments to be made as a result of this asset that we have bought, that we are installing, then according to IAS 37, we must get the initial measurement and add it to the initial cost of the asset. If we borrowed money to acquire or manufacture the asset, then the interest element during the period of constructing the asset must be capitalized or included in the initial cost of the asset. These are principles, they will never change. So when you pick the accounting standards, you have to understand the principle. And it is something I really pound literally into my students. And I'm like, listen, the accounting standards, it's about principles. And when you see a question before you, you are just going to apply the principles. So sometimes what people do is to rather be solving questions. Yes, we will come to solving questions, but if you don't understand the principles, you cannot solve the question. So you need to get your foundation right, then you can approach a question. Let's say you take IFRS 15, revenue from contract with customers. What is the fundamental principle when it comes to revenue from contract with customers? The rule is simple, that we recognize revenue when a performance obligation is satisfied. In other words, we can only recognize revenue only when we have done the job and the customer is satisfied. Now, so if the customer pays us, we have received the money but have not done the job, can we recognize revenue? No. That will be recognized as a deferred income. It's a liability on the face of the statement of financial position. This is a principle you must know about it. Another principle about IFRS 15 is that if the performance obligation, what the entity will provide to the customer for the consideration being received from the customer is more than one, then it is important we allocate the transaction price to the performance obligation using the stand-alone prices. This is a principle. It does not change. You have to understand it. And this is my third step, and it is one of the important steps that you have to understand. Because you see, if you fail the financial reporting examination, it's because you don't understand the principles. It's because you don't just get the principles. That's it. So when you pick any accounting standard, so what I tell my students is this: you can have a flashcard, you can have a notepad, you can have something that you write the principles on it. You write the principles on it. And that is the next point, which is your studying style, and I'll come there in a sec. But you have to understand the principles. Because when you see any question and you are unable to solve the question, it is not that the question is difficult. It is that you don't understand the principle. Then I have had a couple of students who also tell me, Nhyira, I understand. I mean, when you explain the thing, I get it. But when I see a question I'm not able to solve, then I'm like, no, you don't understand the principle. Because when I give assignments and they screw up the assignment, now we are solving the question, then I refer to the principle, then we apply the principle, then they are like, how? I said, yes, because you did not understand the principles. So you have to understand the principles underlining each of the accounting standards. That is my third tip on how you study the accounting standards to ensure that you pass the examination. The fourth tip on how you can study the accounting standards is your studying style. You see, we all learn in a different way, and it is important you identify what works best for you, then you optimize on that. So you need to identify your studying style and study using that style. So you have to sit down and ask yourself, how do you remember things? How do you get things to stick? And this is where I have problem with a lot of students, because there are a lot of students, you are writing the exam, your problem is corporate reporting, financial reporting, you have challenge with the accounting standards, but they will wait. They will not study. And they'll be giving themselves excuses. Oh, my father, my mother, my wife, my husband, my children, my job. Yes, all those things are important. But they will be giving themselves these excuses. Then 2 weeks to the exams. A week to the exam, you take leave and you think you can put all of these principles into one sitting. No, it cannot work that way. You don't become successful that way. That is not how you pass the examination. It cannot work that way. You don't pass the examination in that manner. So look at your studying style. What works best for you? For some of you, you have to read something over and over again before you get it. Because you see, you need to, whatever you are studying, you need to get to the aha moment. The aha moment is, okay, this is how this thing is. If you learn, you can only say, I understand this thing, if you get that aha moment. That, all right, this thing, okay, this is how it is. Then that means it has sunk. And this is not, coming out with something, no, but it's like really, you get the idea. So find out what works best for you. If it is repetitive studying, make time to do repetitive studying. If it is, another thing is you have to engage all your senses when you are studying. And I've shared this over and over again on the channel. You can check how to playlist on the channel and you can look at this, because your sight, what you are hearing, what you are looking at, even your smell, okay, affect your memory level, your retention capacity. Because if you are surrounded by a scent that you don't like, your brain is not going to work well and you can't retain a lot of the information. But if you are surrounded with a nicer smell, it stimulates your brain to ensure that you're able to remember everything you are studying. So imagine you pick a book and then you are studying at the dining hall and your wife is cooking. All right, then you can smell the aroma of the food and all of a sudden, nothing you are studying will stick, because at that time your brain has been stimulated, your appetite has risen, and your salivary gland is just secreting saliva, and everything in you is saying that let's go eat, this food is going to be nice. So at that time you lose your senses of remembering whatever it is that you are studying in that moment. So engage your senses. There are sometimes, listen to the lectures, just listen in the background. Probably you are washing, you are cooking. Maybe you're just listening because you have listened to it already, you have watched it, but you're just allowing it to play. Maybe you are jogging, then you are listening to it. You are in the gym, you are listening to it. You are cooking, you could be listening to it. Now, when you listen to it over and over again, it increases your retention memory, because it tells your brain that this thing is important. Let's post this way. Let's keep it here so that we can call it up over and over again. There is nothing you study that you forget. Nobody forgets. The problem is that there is a lot of chaos in your mind. So if you don't order yourself, then you can't recollect an information when it is required. Why am I saying this? And this is not me. This is science proven. This has happened to you before. You are in an exam hall, or you are having a discussion with someone, and there is something you've read about it that you want to tell this person, or that you want to provide the answer to, but you do whatever it is, you can't remember. But then you are just lying down, or maybe you are in the washroom, or you are bathing, and as the water is just pouring over you like that, all of a sudden something that you couldn't remember in the exam hall, something that you couldn't write, now it is just coming. It is just coming. It is just coming. And you're like, I don't need it now. Why is it coming now? It's because at that point, you are calm. Your nerves are very excited. So your brain has relaxed, and so now it is bringing out the things that you have put in that it considers necessary, and just bringing it back to your memory and refreshing your memory. That is how life is. So there is nothing that you have studied that you say, I have forgotten. For the most part, it is there. Only that you use the wrong strategy, you use the wrong approach, so there's a lot of chaos in your brain. So to have some order, make sure you make time to study. Make sure you engage your senses. Make sure you use your study strategies very well. For some of you, you cannot study alone. You work with a study partner. Find out. So maybe someone else is doing financial reporting or corporate reporting, and be careful when choosing a study partner. But that is it. Talk with the person, sit the person down, hold yourself accountable. So what if you have a study partner? What is going to happen is that maybe your study partner will learn IAS 16, then you will learn IAS 12, income tax. So when you meet, then you are going to be asking the questions about IAS 16. So you have some questions and answers about IAS 16 you're going to be asking, and this is going to be sometimes audible, verbal discussion. Then they will also ask you a question about the IAS 12 that you studied. Then you are discussing it together. Then if there is anything you need clarity, you refer to your notes. Then after that, you pick a question in respect of the standards that the two of you have just studied, have just revised. Then you solve the questions in that regard. That is going to be very productive, and that can help you a lot to really understand what you are studying, and most importantly, retain what you are studying so that you can recollect it when it is needed. So that is the next tip that you need to know about. You have to study, but make sure that you are learning in the right environment, using the right strategy and approaches to increase your retention level and to increase your ability to be able to recollect the information. So how do you pass the accounting standards? How do you understand the accounting standards? You understand the accounting standards if you spend time to understand the principles and you adopt the right strategy. Then the fifth tip that I want to give you on how you can study the accounting standards is you make sure you expose yourself to a lot of questions. Because it is one thing to understand the principles, it's another thing to apply the principles. So solving questions will play a key role in your ability to be able to pass the examination. That is very important. But you don't solve questions when you have not understood the principles, when you have not spent time to understand the principle. That is why I said you need to understand the basic principles in respect of the standards. Then you now expose yourself to questions. Because as you expose yourself to questions, the principles will come to life. There is a statement in certain questions that you will come to get, or you come to see as you practice a lot of questions. And I want you to expose yourself to questions across all sources. Yes, the ICAG past questions will be important, but remember that 99.9% of the time, nothing in the past question will be repeated. So yes, you can use the past question, but nothing in the past question will be repeated. Instead, you can get questions from the ICA question bank. You can buy that. You can get some questions from ACCA sources. You can get some questions from CIMA or other sources. Then you can get some questions also from the tertiary institutions. So people doing first degree, their MBA, their MSc, end of semester examination, like those questions, you can get them and solve them. So make sure that you are really getting questions from various sources and exposing yourself to them. Some of you, what you do is to be with the ICA past questions and you solve from 1963 up to 2023. That is not the way to go. Okay, go outside the ICAG past questions and make sure that you really know about the principles and apply the principles. So expose yourself to a lot of questions, because that is how you'll be able to pass the examination. Then my final tip that I'll give you in relation to how you study the accounting standards will be to have the right mindset. Like I said in the very beginning, your mindset is very important, because the way a man thinks in his heart, so is he. If you think the accounting standards are difficult, it's going to be difficult. Whatever you tell your mind is true. Okay, so if you say something is difficult, it's difficult. When you say something is not difficult, it's not difficult. When you say I can, you can. When you say I cannot, you cannot. So whatever you tell your brain is what your brain is going to go in for. There is nothing like right or wrong. Whatever you tell your brain, that is what it's going to go for. So you have to make sure that you have a positive mindset. You need to make sure that you see this thing as it's easy. Because one of the myths surrounding the ICA examination is, hey, it is difficult. No matter what you do, the ICA will fail you. Nobody is there to fail you. Whatever you write is what you get. Because the people who make such statements, I always ask, the exam you failed, someone was an overall best student. The exam you failed, some people passed. So what is the excuse? You think you are bigger than the ICA? You think your destiny is so crucial that if you become a chartered accountant, Ghana will become like heaven, or what? Like, how? Why do you make such statements? Have the right mindset. It's a professional examination. Garbage in, garbage out. Whatever you go to the exam hall and write, that is exactly what you get. And people go to the exam hall and get 5%, 3%, 15%, 20%. Whilst others go and they get 70, 80, 90. So you ask yourself, what is the problem? It's the mindset. If you see the exam as it's easy, I can do it, my life depends on it, I need to become a chartered accountant as early as possible. If you see it and you imagine yourself going to take your certificate, how your life is going to transform. If you imagine that and now let that inspire you to study, to sacrifice, to dedicate yourself, you will become successful, because the mindset also links into your attitude, your approach, the way you do your things. But ultimately, you have to make some sacrifices. The people who pass the exam are the people who go the extra mile. The people who pass the exam are the people who are willing to make some sacrifices. The people who continuously fail the exam are people who are not willing to make certain sacrifices or adopt certain strategies to help them pass the examination. So how do you learn the accounting standards to pass the examination? These are my top tips and what you have to do to be able to pass the examination. Let me know in the comment section any other questions that you have for me, something you would want me to share my thought on, and I'll see you in the next episode as we continue with the IFRS discussion. In the next video, I'm going to be taking some of the accounting standards, and we're going to be explaining the various fundamental principles so that you can understand them. Then you will expose yourself to a couple of questions. I'll catch you in the next one. Thanks for watching.